Hi everybody, Alex here from Expert Forex, and in today's video we're going to be talking about one of the most neglected skills in Forex trading, and that is the skill of getting to know your new trading robot. Now, we've recently had a brand new robot that was beta tested, and we have also launched a free robot to our premium forum members. And from this process I can tell that very few traders have the skills to get to know their trading robot. Now, what I'm going to be showing you in this video is my own personal style of getting to know any robot that I've developed over a couple of years. Now, you'll find this video to be quite a lengthy one because I'm trying to throw in as much detail as possible. But when I do this process, I can evaluate a trading robot within 10 to 20 minutes. And when I say evaluate, that's the first step. You evaluate the robot. If it is no good, you stop using it or you discard it. If it has some potential, then only do you move on to more advanced testing. So what you're going to be seeing here is exactly that. I'm going to be taking you through the process that I use to the point that I have decided on a robot that is worthy of forward testing. What really motivated me to make this video was a post that was made a short while ago by one of our traders that is a fairly experienced trader. This trader's had almost 200 posts in our forum, and the first thing the trader did when exposed to a new EA is they went and live traded it in a demo account using a very restrictive methodology. And what you will see in this video today is there is a lot of groundwork that has to happen before you even think of testing an EA on a live demo account. And I must just repeat, so what you will see today is a methodology that can be adopted by beta testers or anybody purchasing a Forex trading robot. Okay, so I'm going to go through the process that I use for getting to know your new trading robot. The first step here is understand the robot. In other words, understand more or less what kind of robot it does, what it does, how it does it, that type of thing. Now, you might say, now where do I get that information? Normally, if you've got it from a reputable source, it will either have a marketing page explaining what the robot does, or it will have videos showing how the robot trades, or it will have other information that you can use to assess what type of robot it is. Now, obviously, after you've got access to it, you should be able to look at the settings and that kind of thing to get a feel of what type of robot you are dealing with. So understand your robot is very important as the kickoff. Then what you need to do is you need to understand the settings of your robot. And I'm not talking about the main ones. I'm talking about every single setting. So you need to look at every setting and you ask yourself the question, why did they put that setting into this robot? That's very important. If you can answer that question for every single setting that there is, then you'll understand the settings very well. And how do you understand the settings? There's normally a user manual that will explain the settings to you. Otherwise, the description of the setting will also give you quite a lot of guidance, or the supporting marketing material again, or any other information about the particular robot. Then the next step is to create a test template. A test template is required so that you can test thousands and thousands of versions of the settings so that you can get to a point where you can assess whether the robot is profitable and whether it is a risky and or robust EA. So creating that template, and I'll show you the process that I use to do that, is very important. Once you've got the template, you actually then just test the robot. You run the test, and ideally you must do it using high quality data, which I recommend tick data for this, and I'll talk a bit about tick data later on. And then once you've done all those tests, you review the test on an intelligent basis, and by that I mean is whether your initial template was correct in the ranges that you're testing. You also test for risky settings. You find out which is the most sensitive setting, which is the least sensitive setting, that kind of thing. So you review the results in a lot of detail. Only then, once you've proven the robot to be a successful robot, do you then start optimizing position sizing. So you would actually say, how much money can I make from this robot? And you test certain position sizing settings. And after all of that, you'll come to a conclusion. And your conclusion will really be, can you go on testing this robot, or should you reject it? Should you decide to go on, then you would rerun that robot using different time frames, different currencies, different trading instruments. You might even test it on metals, on cryptos, on indexes, to see which one of those would react most favorably to that particular robot. Then you would review all those test results. And as I say, this sounds like a lot of testing. Most of this can be done within a day or so. So it isn't all that tricky. But one of the main things that happens at the end of the testing is you look at what the robots that you already own, and you look at this new robot and you say, is this robot better than anything else that I own? Is it worthy of a place in my robot portfolio? And certainly if it isn't, if it's too risky, if you don't like the equity charts that it's producing, you would reject the EA or the robot. And should you then decide to go on, that is the point that you would demo trade the robot on your particular broker to see that you are getting the results that you anticipate. And you do that for about 2 to 3 weeks, and that is mainly to align the chosen settings to your broker and to your expectation. So that's the point we'll stop, and only at that point do you start trading the results live on a demo account. Now, if the tests are not satisfactory, you would review the ranges of the settings, and I'll show you how we do that, and you'll test it on other instruments and other time frames, so that sometimes robots don't work on a certain currency, but they work fantastically on another currency. Sometimes robots don't work on long-term time frames, but they work fantastically when used as a scalping robot. So you have to test all of those items for yourself, because in the end, all of this is done to give you the confidence that you can use the robots. Okay, so let's move on. Right, so the robot that we're going to use today is Always Trading Robot. It's a free robot that's available in our premium member forum, paid forum, and members are already downloading it and using it. And basically how it works, it's a random trading robot. So what you do is you decide, am I going to buy or sell as my first transaction? And once you've decided that, you wait to see if it goes into profit or loss. If it goes into profit, you tell the EA, whenever there's a profitable transaction, trade in the same direction or reverse the direction. So that's what you tell the EA. Or if there's a loss, reverse the direction or trade in the same direction. So on every single transaction, whatever instructions you decide on, the robot will continuously do those transactions over and over again. So it's a random trading robot. It has no indicators. It just follows those logical steps that that are there. So it's quite an easy one. And the other thing that you can control is the tops and stops and targets. Sometimes you want to put big stops and small targets. Other times you might want to put big targets and small stops. So those are the variables: buy or sell, and what do you want it to do when the results are known, and what are the targets and the stops. So let's have a look at the settings. So the settings on this robot's very easy. So the first setting is what do you want to do? Do you want to buy or sell? You just say what you wanted to do. It doesn't. In the end, that particular setting is not that critical. Sometimes it makes profits on both buy and sell decisions at that particular point. Then there's that drop down menu where you have those 4 strategies that I've just mentioned, which says if you've made a profit, what must it do? If you've made a loss, what must it do? And there are 4 versions of what it could possibly do. There they are, and you can choose one of those. Then there's the position sizing. As I say, the position sizing you do later on in your testing, so that is, but you can position size it on a percentage of your equity or account balance, or you can position size on a fixed basis. Then we have your initial stop loss and your take profit, as I've mentioned before, and those settings can vary from currency to currency, from time frame to time frame, and we will look at how you can refine those particular settings. And then the rest aren't really all that important. If you're going to trade index markets, there is a setting that you can use to say, hey, hang on, I'm trading index markets, and the EA will adjust its logic for those particular markets. So the settings are pretty straightforward. There's 1 setting, 2 settings, and then those 2. So there's 4 settings that we need to worry about. Now, just a word on tick data. When back testing, you have a choice of using either the broker's data or tick data. The broker sometimes has got tick data, but it only goes back a few days in some cases, or maybe a few weeks in other cases. So the broker's ability to provide tick data is very limited. Most of the data provided by brokers are candle data, and I'll show you how that works. But when you use tick data, it is every change in price, every single change in price is recorded when you're using tick data. So it's a lot more accurate, and I think the best is, let me explain why it is a lot more accurate. So here are 2 price movements that are identical. The one is on a 1-minute time frame, and the other one is on a 1-hour time frame. So what we're looking at is all of these 1-minute movements that you see here, and you can see those lines are identical. Those lines are at identical levels. All of those 1-minute movements are included in this red candle. Now, just to illustrate the sensitivity behind this, and it's just a concept. Let's say we're trading the grid system. Grid system says buy and sell every time you touch a grid line. So we've got here 6 grid lines on both of them, 6 grid lines, and basically the EA would say, oh, there's a touch, 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 and so on and so on. And if you count up all the touches, you have 22 line touches. Now on this, when the EA looks at this is what the broker historical data looks like. The EA only sees the open price, the high, the low, and the exit price. So if the EA had to interpret this candle, it will say 1 touch, 2 touches, 3 touches, 4, 5, 6, 7 touches, and it would go out 7 touches. So you can see the sensitivity behind using a 1 minute chart and a 1 hour chart. Now just to give you an idea, if you're using tick data, it is possible that there are hundreds of tick data bits of information that comes through on a 1 minute chart. So tick data is by far more accurate than using candlestick historical information from your broker. And let me just show you how you can see that. So where you can see this is you go into Tools, History Center. There's the History Center. Oh, and there's the pound, and there's the 1 hour information on the pound. And this is exactly what's available. The open price, the high price, the low price, and the close, and there's also volume information. That's all that is available on broker history. So I'm making that point because a lot of people don't realize how more accurate tick data is. Okay, let's not waste any more time and get straight into the testing process. Okay, we're ready to test the Always Trader, and as you can see, I've opened the strategy tester. You do that by clicking on View and clicking on Strategy Tester. Now there's a drop down menu with all your EAs in it. You just select the EA that you want to test. If your EA is not in that list, make sure that you've loaded the EA into your MetaTrader platform, and if you have already, then simply reboot the platform. So in other words, close it and open it, and the EA name will appear in the drop down list for you to select. We're going to be testing the pound USD, and I'm going to be using the every tick basis. I don't normally do that. I normally use the open prices method because that is so much faster, but I want to be extremely accurate today, and the every tick basis is the way to go. So then what I'm going to do today is I'm going to test from the 1st of January this year to the end of June, which is a nice 6-month period. Some people like using 12 months, some people like using 5 years. 6 months is enough for me because this is a random system. Then I'm going to be using a spread of 1. Now in certain circumstances, MetaTrader uses points here, and in other circumstances they use pips, depending on the type of account that you use. A normal account uses points, so that's why I've got 10 points in there, which is equal to 1 pip. Then I'm going to use the 1 minute time frame. For this particular EA, if you're using tick data, it doesn't matter which time frame you use because the EA is going to be trading according to tick data, as we've explained earlier. But 1 minute will be very close to tick data. Then I open the expert properties, and here they are. And as I've discussed previously, there are very few moving parts in this particular EA. I'm going to be looking at the settings that really are going to determine whether this is a profitable EA or not. So the first setting there is the start with a buy or a sell. Now I don't know, so what I'm going to do, I'm going to say start with a buy and end with a sell. So that's how you do it. They're both in drop down menu, so you just select sell. So you start with the one at the top, the drop down buy, and you end with it. Now it will then test both buy and sell options as it's going along. And then I tick on it so that I know that option is going to be optimized. Then the strategy, subsequent entry direction, which is basically the strategy. There are a few options there. There are 4 options. So what I do is I select the first option, and I select the last option there, and it will then test all 4 the options for us. And all you do is you click on please test that. Now, when it comes to position sizing does not affect the proven profitability of an EA. What it does affect is it acts as a multiplier. So once you know you've got a profitable EA, you can multiply the results by increasing your lot sizing. So lot sizing is a multiplier and a risk controller. You don't test that initially. You don't need to test that, so I'm not going to test it. I'm going to keep this at 0.01. I know we recommend 0.01 per thousand for our EAs, but because this EA trades one trade at a time, and the EAs we recommend $1,000 for every 0.01 are EAs that use multipliers. In other words, they can open 30 or 40 trades while they're trading. So that is why you can take a lot more risk on this particular one. So 0.1 is a good testing number. Then we look at the initial stop and initial target. So what I'm looking at, I'm saying, okay, this is a random trader. It will cash in stops and targets. I wanted to trade reasonably actively, and therefore I think now the pound ranges around 60 to 80 pips a day. And how I find that is I open my normal trading charts, and on my normal trading charts I have a little reader there that is the ATR reading, which is the average range that the currency trades in the time frame allocated. So if we go to the daily, you can see the pound trades about 80 pips a day. So we want to have more than one trade a day. So we want to go for a range that's less than 80. So what I'm going to do here is I'm going to say, all right, start at 10, increase it by 5, and then let's go to 80 over here. If you make it much bigger, and the EA will be much profitable if you make it much bigger, it becomes unrealistic to you as a trader. In fact, what I'm going to do is I'm going to keep it at 60 because we want more trades than fewer trades. And then the take profit, exactly the same thing. I'm going to start with 10, go up by 5, and go to 60. So I'll click those two, and then there's nothing else that needs to be optimized. So you can see this is a fairly simple EA. The only 4 items that I'm testing, and here are only 2 options. So there are 2 options there. There are 4 options there, and there are 10 options here and 10 options there. So there's not a huge amount of options, and that's another reason why I've selected to test the every tick method. Very few options. So this is our test template, in fact, and what I'll do is I'll save this and I'll call it the always test template. Okay, so we know what it is, and I'll save it. So now if I go and do other things, I can always come back and load that template, and this is what I'll see when I load it. So I click on OK. So now we are ready to do the optimization. But before I do an optimization, I'll always run it without an optimization to see if it's actually working. So I click on start, and it goes in a way and generates the result for the current settings that I have in the EA. Okay, it's finished. Let's go and have a look. Okay, so just those settings that are the default settings have generated quite a nice profit there. Note that I'm using $500 for my testing. Reason being is that that's more or less the account size that the average trader would most probably want to use for this particular EA. So I've put in initial deposit $500. So I'm testing on $500, and so far the results are around about 100 I think it's about 20 or 140% return, and the drawdowns seem to be not too bad. The expected payoff is good. So the point of this was just to make sure that the EA actually is generating results, and you can see the modeling quality is nice and high with that green line. So we say, okay, we're happy that the EA is running. We can now start our testing. Okay, so when I first test any EA, I run it on open prices first. Reason being, open prices is very, very fast, and it also gives me a high level view of the profitability of the EA. So I'm going to do an open price optimization on this EA. And what I then do is right at the end, I run a tick data test to see how robust the open price results should be. Now, because we're using a time period of 1 minute, the results should be reasonably representative. Also, because we're not using any indicators in this EA, it doesn't matter which time frame we use. So I'm going to run this optimization on open prices at first, and let's see what results we get. I've clicked on start and it's running away, and it's going to calculate how long it will take to do this optimization. It's telling me that it's going to take about 10 minutes, and it's going to be doing 968 versions of the EA settings. So we're now testing almost 1,000 versions of the EA settings. It's going to go away and test them all and come back in about 10 minutes to let us know what the best results are. I'll pause the video and we can have a look at those results when they are complete. Right, it's finished its optimization run, and it has taken a lot shorter time than it initially indicated. So let's go and have a look at those results. So the first thing I do is I look at the optimization results and I sort them in profitability order. So it's telling me that it is profitable. There are a lot of profitable results that have come out. And that's my first objective. I firstly want to make sure that the EA is profitable. Now, that's not a bad result considering that we have started with $500. So $2,000 is not a bad result at all. The first thing I then do is I take the best result, I put it into the settings. So the best result has actually gone into these settings over here. And but the second thing I do is I then go to the optimization graph and I click on 2D surfaces. And I want to see the relationship between the settings. So I click on here and I say the x-axis. Let's first look at the initial stop and the initial take profit relationship. So what it's saying is don't bother testing in this particular area. It's no good. Test in this particular area where the settings are sort of over 45 pips, and year to over 45 pips gives you the better settings. So what I'm going to do is I'm going to go to the settings and I'm going to change this to say 45 and 45. Okay, so we've refined that area. Then let's have a look at some other settings. So we go back here. So now let's have a look at the subsequent direction and the entry direction. So what it's telling me is it doesn't really matter whether you start with a buy or a sell. It's not that important, but certainly starting with a buy, because that is setting 0 on the direction one, gives you the best results. So what we immediately know, we don't need to test for sells. So we go in here and we say, okay, let's not test for sells, and we just stick with buy. Buy is the number one option. Okay, so now we're cutting down our testing quite a lot, and you'll see why I'm doing that. Then it says, then we need to test, need to see which strategy has been the best. So already we do have some guidance there, but let's have a look when we compare the strategies with and I'm going to say subsequent entry direction, and we immediately see that this strategy here, number 2, shouldn't be tested. That one shouldn't be tested, and that one is marginal. Strategy 1 is the one that we should run with. So we go in here and we say, okay, we don't even need to test it anymore. It's strategy 1. So strategy 1 is actually the second one. The second strategy. So now I don't need to test for strategies anymore. I know the direction that gives the best results, and the only thing we need to really test now are the initial stops and initial target items. And this is where I now switch to the every tick basis. So we go tick, and we're now going to do optimization on the every tick basis using the information that we gained from running it initially on the open price basis. So we're going to go optimization. Now this might, even that might take a while. Let's see, I think there's only about there's under 10 options that it will be testing, but it might take a while. Okay, it's saying that it will take 5 minutes to do this. That's fine. It says it's testing 16 options, so that's also fine. And let's wait to see what results come out of that. If you initially want to start looking, there are the options as they come out of the testing, and we're looking at 640, but let's let it complete all the options. And again, I'll pause the video and come back when this test is done. Okay, the results are out of the every tick optimization process, and let's go and have a look at them. And there they are. They are sorted in profitability order, and here we have the profitable ones and the ones that were not profitable. The other thing that I look at is what are the trends for the ones that are not profitable, and you'll see there's much of a difference between the least profitable, which is 60, and the most profitable, which is 50, which is a bit of a concern. Then there is, if you look at the take profit is the same. If you compare the least profitable, so a little bit concerned about the robustness of the settings. In other words, if you get it slightly wrong, you could run into trouble. So let's have a look if we can find settings that are most probably a little bit more robust. Those settings there, the second one, seem to be a little bit more robust. So I'm actually going to take those settings rather than those ones that are very close to the most unfavorable settings. So I'm going to actually put them in as my selected settings, but at the same time we're still going to look at these graphs, and again it's saying that you can choose most ones, but what worries me in the middle here are the least profitable ones, and they're pretty close to. So on the whole, the feeling I'm getting out of this EA is that it's most probably not robust, but you can make quite a lot of money if you stick to if you get the settings right, which the guideline really is above 55 for your stop loss and above 50 for your target. So we're getting some information coming out. Let's have a look at anything else there. Those are the only two that we optimize, so we're going to go with that. Okay, so now that we've established that the EA is profitable, we're going to do another test which basically says, okay, we know the EA is profitable. We've put in, let's say, the second most profitable settings, and I'll just double check that. And then what we're going to say is, all right, now let's see how much we can multiply these gains by. So we no longer need to test those. We're going to say now's the time to test position sizing. So we say, all right, the test was done at 0.01. So we've tested 0.1, so we're going to use that as our starting base, and we're going to say, no, let's actually go one down. So we're going to go 0.05. We just go, in other words, one down to see if that, no, it won't obviously, but that's the kind of thing that I do, is I test both ways. So we're going to look at increases of 0.5, and we're going to look at ending at, let's say, 0.3. Okay, so we're going from 0.1 to 0.3. So we're testing, what if we increase our lot sizing? Would that improve profitability? So I'm ticking that, and what we'll do is we're going to do the optimization on that. Can you see the importance of splitting the multiplier from the base trading? And again, it might take a few minutes, so I'll pause the video and come back when the testing is complete. Okay, the test is finished. Let's go and have a look at the results, and here we are, and you can see that we've increased the results by increasing the lot sizing. And if you look at the sequence of events, it's basically saying every time you increase the lots, the profit goes up. But the problem is it stopped at the top level that we've tested. So I'm actually going to go in here now and say, all right, we know we need lots of lots, so I'm actually going to test differently. I'm going to say we know 0.3 is the best, so I'm going to increase it by 1, and let's just go to, let's say, 8. Oh no, let's just go to a 1 main lot. So we'll go to 1 main lot, and let's see if we reach an optimum lot sizing level. Remember, this is a EA that only trades one trade at a time, so you can actually risk a lot more on that kind of EA. So we're going to do the optimization again, and again it's going to most probably take 2 minutes or so. I'll pause the video and come back to the results once we are finished. Okay, so the results are out, and it's basically saying that 0.3 was the best setting, because anything after that, if you increased it anything more, you would suffer a margin call and be stopped out. So there we are. We've got our answer there. So we go back here and we go back into our settings and we say, all right, 0.3 is most probably too high. Let's just stick with our 0.1. And now what we do is we run it with the settings that we have selected. Okay, and it has confirmed the results. So far there we are, $500, and it's up to a return of, and remember this is profit, so this is a return of about 210%. Drawdowns, absolute drawdown very low, maximum drawdowns half of the profits, which is acceptable, and the success rate's about 55%. So we've learned a lot about this process. Firstly, we've established that the EA can be traded profitably. Secondly, we've established that you can risk more on your position sizing to generate better results. As you've seen, if we can actually increase these results by 3 times if we want to go the most risky route. Also, we've established that the initial stop and target settings are quite sensitive, in that they can result, if you get them slightly wrong, they can result in poor results. So where do we go from here? Now, because these results of the initial stop and the initial target are very close to the top of these results, I am going to just test them a little bit further. So I'm going to go from 50 to 50, and I'm just going to go a little bit further and go to 80 and 80. Reason being, I just want to see what improvement that would make if we do, because that was hitting the ceiling of the distance that we testing. And so I click that, I say okay, and we optimize those just a little bit more to get a little bit more information. Maybe we shouldn't worry about having small targets, small stops. Maybe we should relax that particular paradigm that we've used to test this particular EA. So again, I'll come back to the video once that test has been completed. Okay, the tests have been completed, and here are the results. And it's basically saying that if you increase your stop loss, you can really make a lot more profits. But I just want to show you something that's quite important, is that if I sort this in passes, in other words, in the order that the testing has occurred, you'll see that the testing happens in a very systematic basis. Firstly, the take profit numbers are the same for all the tests up to a certain point, and then they increase and increase. So it's testing the take profit number on a systematic basis, and it's testing it against the initial stop number, which also which increases all the time until it reaches the next take profit level, and so on. So it's a very systematic test that happens when you are testing. And then if we look at the results, you can see that the results that we started out with can be quite risky, because it's saying for the lower stop loss areas there's a negative, then a positive, and then a negative. But when the stop losses start increasing above 65, all of the results become positive. Then the same pattern follows. Anything below 65 can be negative or positive, but if you increase it above 70, then suddenly it becomes positive for quite a long range, and so on. So these are the patterns that I try and look for. And if you then look at the patterns of the most profitable ones, you find 80, 50, 55, 50, 80, 55, 70, 70, 70. So there's a bit of a pattern here that says 80 or 70 for the stop loss is most probably a robust setting, and then here most probably the take profit can be low, so it can be 50. It can in fact be anything. You'll still make a profit. So the sensitive setting is the initial stop. And what I like to do is sometimes I also like looking at the negative. So what makes those so negative? It's because the initial stop is low. It's below 60. Below 60. So all the ones below 60 are negative. And you see there are not many negatives here, but below 60 starts ringing alarm bells. So what I'm saying is that when you do these optimizations, you need to look at these type of trends, and we can look at the optimization chart, and it's actually saying exactly the same thing. It's saying up to 60 results can vary, but above 60 results are a lot more robust, and therefore if we're looking at the type of settings that we'd use, most probably, let's go to the profit figure again, we'd most probably use high initial stop losses and lower take profits. And I'm going to just take the first one because that meets our needs. It's a take profit that's smaller than the initial stop loss, and it's got an initial stop loss that's bigger than 65. So we've learned a lot from this particular exercise. And the next question is, what do we do now? So I'm going to run this, the best results that we've got. with the knowledge that we know that the stop losses need to be high and the targets can be low. So there are the results again, and remember they are based on 0.01. So you can now go and test the 0.01 in terms of multiplying it up. But my initial idea of doing a test like this is to establish that the EA itself is robust and can produce good results in the future. Okay, so let's go back to the start where we said we want to understand the robot, which we have. We want to understand the settings, which we have. We want to create a test template, which we have, and we've changed since then. And then we run a test, ideally on tick data. But I normally do this on open candle because it's so much faster. I can normally evaluate a EA within 10 minutes very quickly using open candle basis, and then review the results, which, as you've seen, we reviewed it and we realized that our test was too constricted, and we extended the test, and it brought on a lot better results and also gave us a better feel of where the risk in this EA lies and not. And we've come to the conclusion that this EA can be traded very successfully using particularly a big stop loss compared to the targets. That type of conclusion we have reached. So that's the point that we are at right now. And as it says here, if the tests are not satisfactory, review the ranges, which in fact is what we've done. And the next step is to now go and test it on different instruments. Now, the type of thing that I typically would do is I would go and test it with the least volatile instrument. So, for instance, the euro franc would be the least volatile. I'll go and do exactly the same test on the euro franc. And then I would test the most volatile instrument, and most probably the pound New Zealand at the moment is the most volatile instrument. I'd go and test it on that and just see the differences in the settings that come out and the robustness of those particular settings, the reliability of those settings. So by doing this, we're building up a good, really good knowledge base about this particular EA. Now note, we have not done no live trading yet because we are in the get to know you phase of the EA, and only once we know which currencies are the best and which settings are the most carry the lowest risk, can we now slowly move into live testing. Now, this particular EA doesn't rely on time frames, but that's another element that we can start testing. We can start testing the 4-hour time frame, the 15-minute time frame, and that type of thing. And all that will give us more knowledge about which ones are the most robust and which ones are the most risky and which ones are the most profitable. And we would use things like robustness, riskiness, the equity charts, the smoothness of the equity charts. We'll use the 3D graphs and all kinds of alternatives to come up with a evaluation. And while I'm talking about one of the things we didn't look at was the equity, and they are the results of the best test that we've just completed. So the next thing really to do is to go and look at the graph. So the graph tells you that there are some really nice gain periods, but then sideways gain, and then sideways, and then some gains sideways. So it's not a consistent EA. So it depends on when you start the EA. If you, for instance, started the EA at that point, you would just incur losses until it starts correcting itself. So it's most probably not the smoothest equity chart that you could find, and you need to make your mind up. Is this the kind of EA that you're looking for? The one that only makes profits once, twice, 3 times, 4 times in 6 months? So that's what this equity chart is telling me is I've got to wait a long time sometimes for the profits to occur. Look at that. Look at those sideways movements there, sideways, sideways, sideways. And so it's very important to, during your testing, and I'm sorry I didn't show you this, to look at the equity charts of the settings that you've selected, and you say, this is the nature of this EA. It makes nice gains when things go well, and it trades sideways when it's not doing well. Am I patient enough to use this kind of EA? So coming back to point 5, and that's why I've got that alternative in there, I'm now saying I've analyzed this EA. I have come to a conclusion on the EA. I've looked at the equity charts. Is this better than anything else that I've tested? So you start comparing the EA to other EAs that you've tested. And that's a big factor in deciding whether you're even going to do roll forward live testing on a demo account. You need to decide now. Now's the time to do it. You need to decide now, is this EA, does it have enough potential? Does the equity chart meet my needs enough for me to continue trading this, for me to even start the next phase of the testing, which is the demo trading side. So, okay, coming back to the slide that was shown right in the beginning, you can see how restrictive this form of testing is, where the trader has only tested 4 alternatives. They're testing it on a live account, and essentially what all they're doing is they're testing 1 day at a time. So after a week they'll have 1 week's worth of information, which could either be a phase where the EA is doing extremely well, or it could be a phase where the EA is in a drawdown phase, and they might draw the wrong conclusions from that limited testing. Okay, then we need to look at the advantages of back testing over forward testing. And forward testing is very slow. You're trading it day by day, week by week. And back testing is very quick. You can literally test 20 currencies, 3 time frames, and so on in a weekend. Forward testing only produces limited feedback. As you saw earlier, that trader was only producing statistics for the days that were traded, and that is actually quite dangerous, because the days traded could be growth days or they could be drawdown days, difficult to tell. You can get feedback based on long time periods, including the growth and drawdown periods. So when you're testing over a 6-month period, as you've seen, there are growth periods, there are drawdown periods. You can get statistics, you can see how large the drawdowns are, you can see the success rate, you can see the profitability very quickly for a 6-month period. So your feedback, the feedback that you're expecting from your testing, is very, very fast. And then back testing provides valuable information for forward testing. So both play a big role. Back testing feeds forward testing. Forward testing could never feed the final results. You've got to combine the two. So you back test, get your settings that you would like to forward test, and then you forward test them based on that. Ideal market conditions can be identified from back testing. Because it's testing growth periods and drawdown periods, you can go to the charts and say, oh, that was a drawdown period, those were the market conditions that existed then. Here's a growth period, and those were the conditions that existed when the growth happened. So ideal currency timeframes and settings can be produced very, very quickly using back testing. Forward testing will be extremely limited. Now, the other thing which is very important, you can produce meaningful documented proof of the success or failure of your trading methodology, or from the robot that you are testing. Now, that documented proof is so full of statistics and information that it can also be very easily shared with other traders, and also be compared with other trading robots that you are assessing. Now, what I've shown you in this video is an approach that I personally use after many, many years of evaluating EAs. The approach shown in this video is possibly a long-winded one. I normally can do what I've shown you in this video in most probably half or even a smaller percentage of the time. But I've tried to make it as comprehensive as possible so that there are as many learning points that come out of this video. But when I do an evaluation of an EA, I can normally tell within 10 to 20 minutes whether it's worthwhile going ahead with that particular EA. Also, the purpose of this video was to create a framework for future beta testers that are assessing EAs. This is the approach you initially need to take. Do your back testing, test various currencies, and not only currencies, test metals, test some crypto, test indexes, that type of thing. So if you're a beta tester, this is the approach that ideally will give you the information that will tell you whether this EA is a robust EA or whether it should be discarded. Now, I hope you've learned a lot from this particular video, and from me, Alex Deploy, cheerio.